A very good morning and welcome to Business Point. My name is Ubongo Sara, standing in for Queen of Business, Kika Lomo. Okay, today on the program we'll be looking at tax law, power, we'll look at oil prices, we'll look at the customs, some of the things customs are saying, electricity market, and even fish production in Nigeria. A very good morning, welcome to the program once again. But let's go for a short break, and when we come back, we get straight into our business conversation for this morning. Stay with us. Stay with business. All right, today on the program, we'll bring you the most important development shaping Nigeria's economy, markets, public policy, and business environment. All right, so let's go to our first business story for this morning. It's about tax law. 5 trillion naira VAT windfall for states as new formula begins. So the 36 states of the Federation in Nigeria are set to receive an estimated 5.0 trillion naira, that's 5 trillion naira, as their share of the value added tax in 2026. So following the commencement of the new VAT sharing formula introduced under the National Tax Act, findings have revealed that the federal government's VAT allocation is expected to drop to 922.53 billion naira in 2026, down from 1.04 trillion naira in 2025, even as the VAT pool itself grows significantly this year. Alright, so this is actually a major fiscal shift in Nigeria, one with long-standing consequences for Nigeria's federal structure. So the revised includes 2026 to 2028 medium-term expenditure framework and fiscal strategy paper, reallocating shares of the VAT pool to give states the lion's share. So what it means is that going forward in 2026, Nigerian states are going to be receiving 55% of VAT payments in Nigeria. That's how much of the share that states are going to be getting. 55% of all VAT state payments in Nigeria will be going to the states, while they are reducing the federal government share to just 10%. Also, a lot of people always talk about VAT. Yeah, we are paying VAT, we are paying VAT. So for this year, going forward, because of the new tax reinventions that we have in Nigeria at the moment, states will be getting 55% of all value added tax in the country, while the federal government of Nigeria will be getting 10%, and the remaining 35% will be going to the local government areas. As to VAT payments, local governments get 35% of VAT payments going forward. States in Nigeria will get 55%, and the federal government will do 10%. Let me just say that again too, because this is something a lot of persons need to know. And the new VAT policy that is going forward in the country will be having states in Nigeria get the lion's share. So for value added tax going forward, states will be getting 55% of the total VAT that we generate in the country, while the federal government gets 10%, and local government are entitled to 35% of all value added tax. Alright, so this adjustment comes at an expected expansion of the VAT pool from 6.95 trillion naira in 2025 to 9.23 trillion in 2026. And this is also very significant because we saw in the budget presented, last year, that's 2025 December, by our president, talking about President Bola Ahmed Tinubu, to a joint session of the National Assembly. We saw that the budget we're expanding our tax base from 6.95 trillion naira in 2025. That's for VAT, right? So the VAT base is being extended this year to capture 9.23 trillion naira. That's the expected revenue that the government is hoping to get from tax in 2026. So 2025 we got 6.95 trillion naira from value added tax, but in 2026 the government is looking at getting about 9.23 trillion naira in 2026, expanding the tax net. Of course, the president has been very straightforward about this, and he's been very clear about the fact that we have to expand our tax net, have more persons come in, make sure that the value added tax is increased. So we are hoping to see an increase from 6.95 trillion naira that we had in 2025 to 9.23 trillion naira. So more than 3 trillion naira in addition of what the president and the tax team and the economy and the government hopes to be able to raise this particular year. But when that money is being raised, the government is saying 55% of our value added tax will go to the state, 10% will come to the federal government, that's the government at the center, while the local government areas will be able to get 35% of all the value added tax in 2026. That is the projections that the government is making. But also the government is saying that by 2027, we should have raised our tax net, the value added tax, to 10.87 trillion naira. So those are the projections. In 2027, the government is saying, okay, let's do 9.23 in 2026, then 2027 we'll do 10.87, and by 2028 we should be able to do 13.28 trillion naira from value added tax, right? So expanding the tax net, we are testing it this year by the federal government. Let's see if we can do 9.23 trillion in 2026, and we'll further grow it from there, 10.87 trillion in 2027 and 13.28 trillion by 2028. All right, so for the first time since the adoption of the VAT in Nigeria in the 1990s, the subnational government, that's the states, are now positioned to receive a majority share of the major tax stream in the country. The VAT has been a major tax stream in Nigeria for so long a time now. And with the Tinubu administration widening the tax net, we may be seeing more and more, revenue raised from value-added tax. Of course, from 6 point something, we are now expecting to be able to raise 9 trillion naira and above this particular year, do 10 by next year, and do 12 by 2028. The government is very clear as to the medium and midterm, strategy framework as to how to raise the tax net, capture more people into the tax net and raise more money, and how the allocations will be done to the state, to the local government, and even to the federal government. 10% federal government, 55% state, and 35% for the local government. So a lot of persons have talked about how this can actually limit autonomy and can make states highly dependent on statutory allocations because of the predictability of this particular revenue, because one revenue that is very predictable is the value added tax. It is quite very predictable as to, okay, it will keep rising. We can do some calculations, how many persons are in the tax net, how many persons pay their VAT, how many persons are using products and services that value added tax is gotten from. You go to a mall, you make calls and all of that, every other services that the value added tax is taxed from. So it is quite very predictable and could lead to persons depending more on the federation account, especially the states, now knowing that the states are having the larger share and the lion's share of 55% of the value added tax. All right, so if by the projection of the government we are able to do 12 trillion naira as at 2028, you could imagine that there will be more money sent into the state, which should in turn be put into the economy, project the economy, bombard the economy, and actually help the economy become more stable. But these are things that economists talk about as to when revenue is predictable, some states may become more dependent on the allocations that will be coming in from the federation account. But these are matters that could also be argued that the money could be gotten into inflows of education, of the economy, of agriculture, and help to revitalize the Nigerian economy one more time, right? Once more, to be able to compete favorable with the emerging markets that we have. A lot of emerging markets that we're having these days in Africa. Ethiopia is trying to do some very great work. We are seeing Kenya emerging as a good site for markets in Nigeria. So there's a lot of challenges that Nigeria must step up and be able to confront. But those are some of the stories that we're bringing this morning. So with a more larger and more predictable VAT inflow, states can plan multi-year budgets, right? So instead of just doing a budget cycle of every year, when the states know that, okay, this is the amount of money that's coming, and with these states are better able to plan, invest more in capital projects, which are very much capital intensive. There are projects that may be needing 2 trillion to do a year in some states, and these are capital projects that could change the face of the state. So with this kind of monies coming in from the value added tax, the states may be able to better plan and do some of these capital projects, and even to improve public services, and also over reliance of oil may be reduced, as we see the federal government try to look into all non-oil revenues to be able to move Nigeria's economy forward. So although the VAT pie is growing, the federal government is structurally smaller and could lead to tighter fiscal space for the country, especially given the prevailing obligation in debt servicing and recurrent spending. So experts are saying that fiscal policy that increasing state share is positive. The federal government must manage revenue volatility carefully, especially in the face of lower oil receipts and a shrinking main pool projected to decline from 60.26 trillion in 2025 to 41.6 trillion in 2026. All right, so the International Monetary Fund has also noted that maintaining the current VAT rate without increasing it could cause revenue slippage, implying that deeper reforms might be needed to expand the Nigerian tax base. All right, so but let's look at some projections for the future. The future projections that we may be having, already we have the medium-term expenditure framework from 2026 to 2028, where states could collectively receive more than 18 trillion naira in VAT allocation, boosting the ability to finance infrastructure and service delivery. Right, so the federal government budget management team says that this revenue increasing depends on non-oil taxes. I actually said this. So the federal government is actually looking at this movement and non-oil taxes. How do we get more taxes from non-oil sector like services sector, hotels, ICT, and every other sector that is non-oil? Excise duty will also be playing a prominent role in receiving those monies, and custom performance, underscoring the urgency to diversify revenue at this moment. All right, so some of the policy risks that people are looking at is that without improved accountability system, there's a risk that the larger state budget may not translate into proportional investment in development outcomes for the people of the state. And this is something that may be true, because now states will have more money. The VAT, of course, states have 55% of the VAT that the government is hoping to raise this year. But if we don't have an accountability process, an accountability system, some states may not use this money to put into human capital development, services sector, healthcare, education, and all of the other sectors that really need this money at this particular time in Nigeria to turn around. And these are some of the challenges that when we have in the country, we are not able to improve and make improvements in these particular sectors in the country. But this is what it is at this particular time. All right, so let's go check another story this morning, and we'll be going to power now. And in the power sector, Genco's invoices fall by 80.56 billion naira on weak demand. Genco's invoices fall by 80.56 billion naira on weak demand. So the total invoice issued by power generation companies fell by 80.56 billion naira in the third quarter of 2025. So the generating companies billed 782.46 billion naira in 2025 third quarter, down from 863.05 billion naira in 2025 second quarter. So the DISCOs reduced their energy offtake by 6.06%. The current open-ended subsidy regime leaves federal government exposed to intermediate subsidy obligation. All right, so this decline at this particular moment signals a structural issue in electricity supply chain. So the drop in general businesses to absorb higher energy costs amid broader economic pressure. Well, but let's stay with this story at this moment, and it's about the generating companies in Nigeria who's actually come out to say that for the third quarter of 2025, that's October, November, December, that the invoices people requesting for electricity fell by 80.56 billion naira, and this is not good for our economy. All right, looking at second quarter, we did better, and we're having this shortage from the GenCos. Remember, the GenCos are already being owed a lot of money because of the investment they've done, and the federal government still does a little bit of subsidy here and there in that particular sector. But there's a lot of investment that must be done as far as the financial capital is involved and is needed in that particular sector. But what we are seeing now is that a lot of persons are not requesting as much power that they requested in the second quarter of the year. But there are a lot of explanations to this, right? People could talk about the festive period, right? Some companies are already closed their balance sheets by the second week of December, so they weren't really need to demand for more electricity at that particular period. And we know companies use higher volume of electricity than people who are at home most times, or people who are in the house, especially manufacturing and production companies. We know that these facilities use high amounts of electricity. So December, we didn't really have a lot of companies doing business. That could also explain. You could also even explain that a lot of Nigerians at this moment are being very, very fluid with the way they make use of electricity at the moment. I know some persons, especially those who are using metering system, once they leave the house, they put off their meters to make sure that electricity invoices is not counting, waiting for them. Their meter still remains where it was. So because the economy is shrinking, people can't afford to keep their meters on, and a lot of persons are also transitioning from using this power supply by GenCos to go green. Some persons are using renewable energy at the moment. There could be factors, but this is what it was for the GenCos in the third quarter of 2025. Their invoices fell by 80.56 billion naira because of weak demand from Nigerians, leaving the federal government exposed to intermediate subsidy obligation at the moment. So the decline is a signal of deeper structural issues, the electricity supply chain at the moment. The drop in GenCos billing reflects not only weaker demand from distribution companies, but also inabilities of consumers and businesses to absorb higher electricity costs at the moment. According to the NERC, DISCOs remitted nearly 95.23% of their invoices, showing improved payment performance. However, reduced offtake means less energy was dispatched, which both reduces revenue for GenCos and cuts subsidy obligations for the federal government. So NERC describes the current subsidy model as risky because it exposes the government finances to volatility in the supply mix and generation costs, particularly when thermal generation, which is quite expensive at the period, increases relative to cheap hydro electricity at this particular time. So most DISCOs made their remittance target a very positive but challenging. Challenges remain: mismatched billing versus service quality, and some economists have argued that development shows a dual-edged problem: cost recovery failure. Consumers are unwilling or unable to pay cost-reflective tariff. There's been that conversation for quite a long time, and GenCos are less able to reinvest in maintenance and new capacity without reliable offtake and payment assurances for them. And that's what we've been having there. But let's go check some other oil stories at the moment. Let's go to the oil markets now, where oil prices are falling as Trump eyes Venezuela's $2 billion crude. So in the global market, all oil prices are adjusting downward amid expectation of increased supply. As highlighted, some of the papers I was seeing this morning says oil prices fell from Wednesday amid expectation of a supply surge after the U.S. President Trump said Venezuela would hand over up to 50 million barrels of crude to the United States market, valued at approximately $2 billion. So let's stay on this context now. U.S. President Donald Trump is saying that the U.S. may not need to buy oil from other suppliers, other countries again at the moment, because when we eventually get into Venezuela and start to do business, oil prices may be seeing more reduction, because up to 50 million barrels, listen, 50 million barrels of crude valued at about $2 billion may be, given to the United States from Venezuela at the moment. And you know that the US is a big market for oil products all over the world, and this can actually affect a lot of oil countries, oil-based economies like Nigeria. With better projections for, I think, 60 to 65 dollar for a barrel of oil at the moment, and you can just imagine what may eventually end up happening to our budget for 2025. So this development had an already oversupply market at the moment, and OPEC plus compliance issues, weak demand growth in key economies, continued production from non-OPEC players have contributed to downward pressure on crude benchmark. So for Nigeria, who are still heavily reliant on oil exports, lower global prices may dampen our fiscal revenue and foreign exchange inflows, and this reinforces the importance of strengthening non-oil revenues like taxes, custom duties, VAT, like the president has been saying, and also reducing cost of production, encouraging gas monetization in the country, especially in the downstream sector, and also budget stress may intensify, requiring mid-year adjustments to our budgets if this is what is going to be seen in 2026, because this is just the start of the year and we're already having this where oil prices may be readjusted because of US going into Venezuela and getting over $2 billion worth of crude oil, as Donald Trump has actually said. So this volatility may impact, causing inflation in Nigeria and even importing costs. The long-term growth will depend on diversification and enhanced crude export economics. But let's take to Apapa Cuts now. Apapa Custom reports 2.93 trillion revenue in 2025. So the Apapa Customs have reported that they were able to collect 2.93 trillion naira in revenue in 2025. So this performance boasts Nigeria's non-oil revenue base for 2025, especially as customs were able to automate their systems and reinforce and reduce leakages. All right, so this actually form a vital edge against oil price volatility in Nigeria at the moment. So with recent data showing that VAT contribution collection remain robust even during economic adjustment, indicating a resilient tax base that underpins fiscal planning if properly administered in Nigeria. So with the anti-smuggling enforcement, data-driven risk management, custom could become a cornerstone of Nigeria's economy strategy. So the Nigerian custom is emerging as a cornerstone of Nigeria's economy strategy moving forward into the future, and congratulations to the Nigerian customs that were able to raise 2.93 trillion naira in revenue in 2025. Of course, with the new tax law and all of these things being brought into the country now, we're expecting that the customs are better able to even raise more VAT and more revenue for Nigeria's government in 2026. But let's take our last story for this morning. It's about Gombe. Gombe State joins regulating electricity market. At the moment, Gombe State has formally joined a group of states regulating their interstate electricity market under the new powers from the Electricity Act of 2023. So the decentralization allows states to issue licenses for generation and distribution, develop local energy solutions, regulate tariff and supplies within states and boundaries. So before now, Nigeria's centralized grid had long struggled with inefficiency, but state-led markets create opportunity for embedded generation, private mini grids, and renewable energy, potentially reducing reliance on national infrastructure and improving service delivery in hard-to-reach areas, because we have most of these areas in some of these states. So competition could improve service quality, investment into local energy ecosystem, and help Nigeria have a better coordination of our national grid operations, which remains very fragmented at the moment. So I'd just like to take this last story now. Nigeria records 300,000 tons of fish production in 2025. This is one of the most encouraging developments in agricultural and blue economy of Nigeria, greatly boosting food security, rural income, and foreign exchange savings for the country. Fish accounts for nearly 40% of Nigeria's animal protein consumption, and this increase signals expansion of agricultural and commercial fishery in the market. So at the moment, analysts point to improve hatchery access, aqua farming extension services, and stronger private sector engagement as key drivers in this particular production raise that we've seen. 300,000 tons of fish production was recorded in 2025. So forward production, Nigeria is hoping to even get to 1 million tons of fish being produced as we move towards 2030. All right, so that's all that we're able to take this morning on the program Business Point. We've talked about fiscal rebalancing, the new VAT formula, strengthening state and subnational with finance, but also putting more pressure on the federal government for revenue. The energy sector realities where power demands weakness and subsidy challenges are persistent, and we have cost recovery, utility sector viability. These are all of the things that we're able to talk about. Even the oil market pressures that we're facing at the moment, as price volatility may be coming as a result of Venezuela, where the US may not need to buy oil from other markets at the moment, and Nigeria may need to look up to other markets to be able to sell our oil at the moment, because Donald Trump said there's a lot of oil in Venezuela, and US may be doing business in that particular place going forward. All right, so that's the much you can take this morning on Business Point. My name is Ubong Osara, standing in for the Queen of Business, Kike Lomohokere. Like I say every day when I come on the show, remember to always do business. Global Television means business. Bye for now.